My name is Brian Leni. I'm the editor of Junior Stock Review. Today I'll be presenting It's All About the People. I'm going to break the presentation up into two parts. The first part, lessons learned, talking about my personal experience, work experience, and then, of course, how I got it to be a newsletter writer. And then I'm going to talk to you about some leaders to watch in the sector. I'm often asked about how to pick those right people to invest in this sector. And to me personally, I think if you look back on your own experience, whether that be, personally or in your career, I think you can see the points or the aspects of a person that led them to excel, to get those promotions, or for you to get those promotions and stand out from the rest. So if you parlay that experience into the junior resource sector, I think you're 50% of the way of finding those right people. For me, right out of school, I started in pharmaceuticals. I was working for a company in Ottawa, small, 20-ish people, but this small company was able to generate millions of dollars, and they were able to do that because of what I think is the primary driver would be the owner operator, a person that was so dedicated and obsessed with the fine details of the process in creating this high pressure, low flow homogenization equipment. So not only was he pay attention to the details, but he insisted that quality was number one. And those are two things that I definitely brought with me when I moved to steel manufacturing. I was first a process engineer on the floor, and then I moved into management. And certainly when you get to management, you start to see those aspects of people that really shine and what make them stand out and push, the company forward. Some of the things that I learned is that you certainly don't need a college degree or a university degree to be successful in any business. It's how what you experience and how you translate it into your actions. Next, the 80-20 rule or Pareto's law. This is absolutely real and definitely reflected not only in regular business or other aspects of life, but certainly in the junior resource sector. The more you do this, you see that 20% of the people or 20% of the companies generate 80% of the value. And finally, a point that's not necessarily related to people, but something that I've learned is that you have to take calculated risk in your life to make a discernible difference. And for me, that made all the difference in my life in attaining the personal freedom that I enjoy today. Ultimately, it's always asking yourself, how can I be better? And how you parlay that into judging other people. So today I want to give you 8 people that have made a tremendous difference in my life. In terms of mentors, it's not like I had any formal relationship with these people. I really learned from afar. And that's why I think you guys can apply the same thing and become better investors yourself. But it all starts with you and what you want out of this sector. For me, it all started with Doug Casey. Doug was able to ignite this, thirst for more knowledge in terms of personal freedom, and how that parlayed into the resource sector. Specifically, gold and silver is where I got started, but certainly branched out into everything else. From Doug, I moved on to Rick Rule, who I'm sure everybody in this audience knows and should be listening to on a regular basis. The amount of knowledge that I've gained from Rick is incredible. One of the things that stands out is the whole idea of price to value and buying things that are cheap. As he says, you are a contrarian or you will be a victim. And this is continue to come up and should be a cornerstone of how you approach the market. You need to buy things that are selling for less than they're worth. Brian Dalton, the CEO of Altius Minerals, a company I've been investing in for a long time, and he's a leader that I absolutely respect. And I think he parlays this sort of mentality to a T. If you look at how Altius generates projects in the down parts of the cycle and then sells or options them off in the higher portions of the cycle, you can see why they've gone from a single-digit market cap to a well over $1 billion market cap. Is really that shining example of a project generation company gone right. Next is Giant Bhandari. Not only a mentor, but I've been lucky enough to have him as a friend. Giant's taught me so much. One of the big ones was you can't predict where a metal price is headed. He often uses the example that the top commodity traders in the world who have access to the most information hedge their bets. So if you parlay that to yourself and you think about how much information you have, how can you not, or how do you think that you know where the metal price is headed? And therefore, you shouldn't be investing in a junior company because you think the metal price is going to go up. The metal price is just one way you can lose money on a junior resource company. Next to that is the importance of selling. And I can remember being in Asia actually with Giant talking about the markets and him talking about selling. And one thing I've learned is there's certain things that are going to sink into your head at certain points in your life when you're ready. And at that point, I was ready to fully understand what it meant to actually sell and sell your positions, take profits, and move them into other things. And that really clicked for me. And that's why 2020 was such an amazing experience. It was the best financial year I've had to date, but it was because I learned how to sell. Nikki Adshed-Bell has given a numerous presentations and talked about this in a bunch of different podcast interviews. And again, I think she's someone that you could listen to and glean a lot from. Next, this presentation is all about people, and thinking about the people in the company and the roles that they play is super important. David Lotan is one of those people that really crystallize how or what ingredients are needed in a company. He uses the adage of a scientist, a strategist, and a salesman. You need all three of those components in a company, and you need to make sure you understand which people in that company or part of the management team is playing that role. And if they're playing that role, should they be playing that role? And so that's something that you need to decipher yourself. Next, Neil Adshed. I would say for the most part, Neil has been just started to come out onto the scene in terms of doing interviews and such, but he's got a tremendous reputation, and he's someone I've definitely looked to listen to, again, to glean information from. And just recently I got to meet him in person, and he gave me some time one-on-one, and we talked about a certain thing that was on my mind, and this whole idea to stick to your analysis and don't necessarily look back and be upset if you're wrong, because it's going to happen multiple times. Last but not least, Justin Tolman. He's a geologist. He's also a fund manager at Sprott. Justin constantly reminds me how much I don't know about geology. And you could say that it's the same for any of these 8 people. I constantly see what that differential is between where I am and where I want to be. And I think that's a good thing. It's a constant learning process, and you need to be in that mindset that you don't know everything. And really, I owe my success, why I'm talking to you today, for these 8 people, and I highly suggest that you look them up and follow along with what they have to say. And again, led to Junior Stock Review, Field Notes, my YouTube series. So leaders in the sector. I'm going to break this part of the presentation up into 3 parts. First, company leader attributes, followed by 5 controllable factors that these leaders have on the companies that they control, and then 5 CEOs to invest in or to look at. So company leader attributes, more than ever, reputation has been a big thing for me, especially coming to these conferences. The fact that you're here today is a huge step towards you understanding better the sector and the people that you're investing in. I think the key point here is more than the good reputations is to stay away from the people that have bad reputations. Again, my experience tells me that usually these bad reputations, especially depending on that person who you're seeking that opinion on, mean more and more. And usually that bad reputation is attached to something very real and a reason why you'll probably lose money with these people over time. Next, the ability to articulate the story. To me, as Dave Lotan talks about, you need a salesman as part of the company. And to me, the CEO or the leader of that company is most often the best person to be that salesman, that's to be able to articulate where the company is and where they're headed. And really the market's impression of that company is going to be centered around that communication. It's so very important. Next, singular focus. I've seen way too many companies, especially leaders, that are involved in multiple deals. To me, in terms of who I invest in full-time jobs, to me, it seems fairly obvious that you should have one focus. The guys that are in multiple deals, there's no way that you're getting 100% of their attention. Therefore, even if they are good, you're still not getting your best bang for your buck. Next, trustworthy and good track record. To me, if a person has a good reputation, usually they're trustworthy and usually they have a good track record. But I think you can look at what a person says, whether it's in a presentation at a conference, whether it's in a podcast interview or anything like that. I think you want to make sure that leaders or CEOs are doing what they say they're going to do. And if they don't do it, they have a good explanation of why they're not going to do it and how they're going to fix whatever issue that was brought up. They need to be clear on that. Next, with track record. Track record is one of those really great marketing gimmicks where everybody wants to say they were part of a discovery, part of an M&A transaction. Unfortunately, you're going to have to do more due diligence into it. And I really think that you should. And again, conferences are a great way for you to sort of weed that out, to see how much impact that person that's claiming they're part of the discovery or they're part of that transaction, that they are actually a meaningful part of it. To me, that's huge. And last, when you find these people in their certain roles, that their skill set and experience match the role that they're playing in the company. Case study, John Miniotis, he's presenting with me today, CEO of Abra Silver. To me, he echoes all of these, exemplifies all of these attributes to a T. I've been invested with John since probably around 2018 when he took over CEO of the company, and really has been masterful in how he's position the company to get value recognition from the market. Right now, that investment going back to 2018 is around a 20x, and I think honestly, it's just the tip of the cusp of this potential bull market we have ahead. And considering what Abra Silver has planned for this year on the exploration front and the development front, there aren't too many silver gold juniors that can produce the amount of ounces that they do already have in the ground and what they may have in the future. So 5 controllable factors to consider. So these are factors about the design of the company and how it's run that I think that you can judge the CEO or the leader by. So as the presentation suggests, the people are the big part. I think you can judge the leaders on how the people that are involved, how that's constructed, from the geologists to the engineers to the financial people that are involved. How does that fit with where that company is in their development curve? I think the contrast to that is that you want to see a payroll size and budget that reflects where the company is in their development. Does it make sense for a sub $10 million company to be giving over $1 million in salaries? I would suggest not, but that is something that you need to work out yourself. Next to that, the board of directors are supposed to act as the overseers, sort of the parent in the relationship. I think you want to see as many independent directors that don't have direct connections to the management team as possible. These people are relied on by shareholders to sort of be that overseer. And so when boards of directors are a little bit more incestuous, I think there's a problem there. Share structure of a company. This is absolutely controllable, especially newer companies or the genesis of a company. This is something you want to find out. You want to see that the management team is got skin in the game, that they've got the price of their shares or their position is relatively close to yours, especially if let's say this company is IPOing or RTOing, if they're already sitting on a 10 bagger because they got free founder shares in the genesis of the company. Do they have as much motivation as somebody that's maybe only sitting on 1 times their money? Again, this is going to be a personal thing that you need to work out yourself. But the fact is, I think you just need to look for it and pay attention. And obviously, the tighter of a structure and the more aligned management is with you as a shareholder, the better. 2 great examples, Kenorland Minerals and FPX Nickel. The project, absolutely controllable by the management team. Where it's located, what business model they're going to use to explore and develop it, and obviously the geological potential. The leader, the management team should be able to articulate to you all those points of why they're there, how they're going to navigate political risk, and what the potential is of their targets. For me, definitely what I've learned, especially on the exploration side, you need to be going after things that are big projects, big tracts of land, big potential. The uncontrollable factor, especially in exploration, I don't think that you can put any onus on the management team if the drill target doesn't end up producing a discovery. That's something that's hidden in the rocks, and really the drill is the only thing that can tell. Next is financing. Management teams have control of these. When, how much, if there's a warrant, how is it a half warrant? Is it a 2-year warrant? These sorts of things. Is it a brokered financing, a non-brokered flow-through, charitable flow-through, life financing? The management team should be able to describe to you why they've chosen the path that they have and when they've chosen it and at what price they've chosen it at. Is the financing attracting, good, sticky money, smart money, high net worths, funds, maybe a good strategic partner in a senior mining company? These are clues especially if the proximity to that senior company investment is relatively close to when you're looking at it. Meaning, in the last 6 months, the senior took a 5% position. That's much more meaningful to me than 10 years ago via a property transaction that Agnico Eagle has a 5% position in us. So you need to do a little bit of digging, but that involvement of a strategic can give you an idea of the potential of that project. The uncontrollable factor is these companies are constantly burning money. You have to expect that financings are coming and plan for it. Finally, marketing and promo, how a company presents itself, whether it's their website, their corporate deck, the conferences that they attend, the podcast interviews that they do. These are all ways that you can judge a company about how it's run and how they want to present themselves to the market. The uncontrollable part about that is you can't always control what the market is going to value the company at. Depending on where you are in the market cycle, maybe where you are in the Lassonde curve, there's just some points where you're not going to get value or recognition for the value that's in the company. And really, as an investor, you're trying to find these opportunities, find things that are selling for less than they're worth, and recognize where you are in the cycle. Again, the longer I've done this, the more I've seen, you're not always going to get this right. You're not always going to invest in the right people. And I sort of view it as a moving target, sort of. You want to make sure that you find people that are sticking to timelines, sticking to budgets, and that they don't transition to mining the market. So now 5 CEOs that I think you should take a look at. Start with Martin Turenne, CEO of FPX Nickel. I've been invested in Martin since around 2018. He's done a masterful job as he's taken over CEO, positioning the Baptiste project in central BC into one of BC's highest priority projects to be developed in the future. They did have some complications with some First Nations about a year and a half ago, but I think Martin's the absolute best guy, best mentality to deal with that situation. And I hope 2025 they get a public resolution to that. Next is Zach Flood, CEO of Kenorland Minerals. Kenorland could be at the top of the list in those attributes and those controllable factors. Zach's done a great job, and along with the rest of the management team, in positioning Kenorland the way that they are. They've already made one discovery in the Renault discovery, and I think they could be on the cusp of another discovery with Oranova's 15,000-meter drill program at South Uchi, which they're doing right now. Next to that, the big picture is they're doing $36 million worth of exploration work in 2025, and I don't know another junior where you can find that. Next is Matti Talika, CEO of Orion Resources. Matti's a geologist, specialized definitely in exploration within Finland, which is the perfect scenario for him to be the CEO of a Finnish focused junior company. I think there's a ton of potential in their current drill program on their 100% owned Risti project. And really the icing on the cake, and something that I think that we'll know yes or no in the sort of short term, is whether they do a deal with Rupert Resources for their joint ventured Helmi project. Next is Ewan Webster, CEO of Thesis Gold. Ewan is somewhat new to me. There was a new pick in the newsletter and investing by me last year. He's a geologist. I think, again, he exemplifies all those attributes that I was talking about. He's able to sell the story. He's able to talk about where the company is now and where they're headed. They should have a PFS done by the end of this year, and the exploration or the blue skies in their ranch project. And last but not least is Chad Peters, CEO of Ridgeline Minerals, someone who isn't new to me. I've known Chad for a while now, but last year they became a pick. I invested in their 12-some placement, and I thought that was tremendous value for Ridgeline at that time, especially considering what they have. They have 5 projects in Nevada. 3 of them are JV'd. 2 of them are 100% owned, and I think you're going to see drilling on all 5 of those projects in 2025. Cut through the noise, real analysis, real opportunities, real results. I hope you'll consider being a subscriber to Junior Stock Review. Last year, we had an average weighted gain of over 150% for the portfolio, and I think 2025 is setting up to be an even better year. If you have any other questions, you can grab me in the hall, or of course, email me here. Thank you very much.